Hello everybody and welcome to forexlivetoday.com market roundup and our look for the coming week. Monday the 22nd of August, we are 15 minutes into the UK session. Starting this week with a look at equity markets and the benchmark S&P 500, which we use to to determine the level of risk in the markets. And as we know, we've had a big sell-off the past month, and over the last couple of weeks we've had lots of volatility and then an attempt at a rally. You could see here as the daily candles progressively got smaller and smaller as we attempted to rise, and this coincided with a reduction in volumes as well. So you could quickly see the bull rally running out of steam. It was a precursor to what happened Thursday, Friday last week when the markets sold off again. As I said, very early in the week, an initial bounce here on S&P 500, but we won't read too much into that yet. So at the moment, we're still in our bearish momentum. If we look across to the major currencies, there's a number of things we need to be aware of. Looking first at the euro dollar. Now, it was the European sovereign debt crisis rearing its head once again. It's never actually gone away, but it kind of gets forgotten about for a day or two, and then there'll be a new news release and back it will come, affecting global markets. However, we have not seen this really affect the euro, and as we can see now for months since back in April, we've basically been going sideways, a really gentle downward trend perhaps, but basically sideways movement. The reason for that is that the euro may be in bad shape, but the US dollar is in equally bad shape as well. So it's probably the most liquid currency pair to trade. However, finding some sort of direction at the moment is extremely difficult. Perhaps short-term trading or the sidelines would be the wisest move here. If we move across to dollar Swiss, now in times of crisis, when the market is risk averse, the market seeks safe havens. Now traditionally you have the US dollar and US treasuries, you have the Swiss franc and the Japanese yen. Now both the Swiss franc and the Japanese yen, which we'll talk about in a moment, have been artificially manipulated. The National Bank of Switzerland has intervened in their currency because they are saying that it is too strong, it is hurting their economic recovery. You can see here over the past 2 weeks we've had weakness in the Swiss franc, which has resulted in this spike up in dollar Swiss. Now, it's not really to do with the US dollar. It's not like there's any strength in the US dollar. It is artificial weakness, i.e. intervention, that is causing these movements. Therefore, in this time where investors are seeking safe havens, Swiss franc for example, how can you trade confidently? How can you make rational decisions based on fundamentals and technicals when there is the risk of the Swiss National Bank intervening at any moment? Having said that, coming off the lows down near 70, they have weakened it sufficiently to bring it up to 78 on US Swiss. So perhaps the risk of intervention in the very short term is lessened, but if we see further weakness, which is a very, very high probability in dollar Swiss, you could expect to see further intervention. Until you see a break of this channel to the upside, I see no reason whatsoever to be long here. If I was to be trading this at all, I would be short. If we move across to cable, so pound dollar, this is one pair that you could trade based on more solid fundamental and technical analysis. There is the argument that even though the US dollar is so unloved and has been so devalued, and even though they were downgraded, the US credit rating, if this equity market crisis continues and if the bearish momentum continues, there is the possibility that you will see people thinking, well, in the past, whenever we've needed safety, we've bought US Treasuries. Even though they've been downgraded just by one step, we're going to buy US Treasuries again. So there is the possibility for strength in the dollar. However, it is rather tenuous. You can see we've got cable here at the top of a range, a very loose range, but we have been making higher highs, so there are some conflicting signals there. Finally, dollar yen, you can see again the intervention, and as recently as this morning, Japanese finance minister has been making very similar noises to the noises that he was making prior to this intervention here, and you can see it had no lasting effect whatsoever. Price immediately retraced back to the levels again. It seems to me that these tsunami lows are the level, and any break of that, and they are really serious about intervention. Trading this pair to the short side from here carries an extremely high level of risk due to the threat of intervention. So if we are unable to buy Swiss francs due to the threat of intervention, unable to buy the yen due to the threat of intervention, nobody wants the US dollar. The euro is in sovereign debt crisis. The British pound is releasing worsening results and news with every month that goes by. Where is the money going? Well, it's very clear. This is the gold chart, and as of 20 past 8 a.m. UK time, we have gold sitting at 1,893 US dollars. In the past week alone, it has risen from, say, 1,732, 1732, all the way up to 1890. You could see a breach of 1900, and who knows where this bull run is going to end. As I say, with all of this uncertainty in the major currencies, all of the previous safe havens being manipulated or affected by unprecedented economic troubles, gold is the beneficiary at this time. Something to bear in mind. Have a good week out there trading this week. Be very, very careful. Good luck, and I'll speak to you all next weekend.